All right, let's get started. All right, everybody. I am Mr. Anderson, True Crypto on X and Twitter. Pretty clearly, as you can see, this is going to be called True Bias Regime Cycle. Maybe it's going to be called that. I think it's going to be called that. But basically, what you're looking at is what we're going to use to start a weekly series on understanding regime cycles. And I want to be able to update this weekly so that people can truly get a bird's eye view of it all the way through the next cycle, whether it be on Bitcoin and other assets. Really, you can do it on any asset you like. And we're going to talk a lot about that so that we can dig deeper. But it's pretty self-explanatory. I'll jump into it, but it's based on a color system. Again, I'll explain it much better. But we're going to have a green, an orange, and your bull cycles are green and orange, by the way, where you have green for up cycles, your orange are going to be your potential mean reversions, and then for your quote unquote downtrend, down cycles, etc., red and blue. We'll go much deeper on a lot of this. We'll go a little bit deeper in this video. We'll go much deeper as the program goes on in time, but it's something I want to be able to do for everybody so that, one, I hope to open their eyes to this stuff so that they can view it a little bit differently. And again, we'll talk deeper about it. And if you continue to watch week in and week out, you're going to learn a lot more about the hows and the whys. So it makes sense, but self-explanatory. I think it should jump out at you in terms of how this works. There's no repainting or anything along those lines. And naturally, if you're trading in green cycles, which can be green and orange, and you're looking for mostly longs in those scenarios, then it should jump out of you that you're avoiding a lot of this stuff, right? And trading a lot of this stuff. So try to keep a focus on that aspect. I'll let you look at it for a moment to get a better understanding just how it should leap out at you and how it might be beneficial. Of course, we're going to track it week in and week out, so it should help you along those ways as well. I'm going to also jump into ETH in a moment to show you that particular chart. We might look at a few others, but I don't want to go too deep today because I don't want this to be a long video, and I do have to cover a little bit more on this particular video than I normally would. So therefore, it's already going to be a little longer. I'll try my best to narrow it down a little bit. Now, one aspect, I will tell you that I am working with WEEX, and if you want to check out anyone that sponsors me, if you want to support me, I'm going to have some links in the description. By the way, I would ask you to follow me as well. If you want to share the material with someone, that would be very helpful. So those are ways to support me as well. Or essentially, naturally, as I mentioned, check out the partners. We're going to show you different aspects of offers that they provide as well to try to see if we can give you some encouragement of things to check them out and see how you like them. So we'll continue that throughout as well, but happy to be working with them. Now, as far as, let's look at ETH now. I mean, hopefully you should get a good look. If you want to pause it, look closer at it, get a better understanding. It's always going to be green until another of the four colors. So when you see, sometimes you'll see something like a no color, gray, or no color at all. And essentially that means it stays within the same regime. It's just kind of more at a undecided state within green. So if you see that within red or within green, it doesn't mean it's no longer green. It's still green. It's just showing you that that state's going. So like this is one continuous state. And then the other way you could look at it is to understand that green and orange are both part of up cycles. It's just that orange is a counter trend move. Would actually be more mean reversion within that. And then of course your red and your blues, which I said I'm going to explain longer, that's going to be your downtrends, blue being a counter trend uptrend within the downtrend. But ultimately that's how it looks. So if you get a better understanding as you start to relate to it more, you could check that out. Now I know if anyone's looking at this in Asia, they usually tend to use a different colors. So they might see it the opposite, so hopefully they understand, but I think it should jump out at them exactly what it is. I know they typically are looking at red for up and green for down, which is an interesting thing. But anyway, let's jump into ETH real quick, show you that one. That is not ETH, hold on. Well, first of all, since we have, so this one is just real quick, just why we have it up, because I know this is going to come up and I'm going to get a lot of questions on it. Most people probably recognize that this is a tool that's called True Vibration. This is a tool that has over 1,000 users. People are very happy with it, and it is absolutely excellent at momentum in timing, right? So I will tell you that I am going to open up the offerings for True Vibration again as well. That video will probably come Friday. That's the plan. I don't want to promise you, but that's the plan. But if people want to start to DM me on X, you can do so. You probably will not begin to get a response until Friday on that for my staff to get that. And then I'm sure those are going to get backed up. So look into like all next week when that communication is going to happen. So if you want to get a head start on the video that's going to come out, feel free. That has 1,000 users. And we do offer a opportunity to have a no cost option on it as well. So you can check that out. But I've been getting all kinds of requests for it. This is the time. I always told them, just wait till we offer it again. So just throw that out there, but I'm not going to go over any specifics. By the way, if I will mention one thing, I know you see the signals here, like these are multi-time frame short signals, and they look excellent here, right? So good job. But this tool is not about the signal. I will give you the signals too. You get both of them. You get this tool and that tool, but it's really much more. What you'll be amazed with is this tool, right? And you have to learn to use it. So think of, if we give Tiger Woods or whoever the greatest golfers are of today, the best tools, the best clubs, they're going to excel even further, right? Because they have that capability. So if we give someone that is mediocre, the best clubs, well, okay, they might see a little bit of improvement. And then as they practice with them and learn the game better, they're going to excel better with those better tools. It's the same thing. You're the artist in any trade, right? The key is going to be you. You could screw this up 9 out of 10 different ways for sure. That's why it's important to invest the time in learning the proper techniques and understanding when and how. But as far as momentum and timing, it is truly excellent for that. And the tool itself is where the real golden goose is. But didn't mean to get sidetracked there. I am looking for ETH. That is not ETH. Well, this is the same true bias, but on low time frames. But we're not going to mess with that much more. We're actually going to be focused on these shows. We're going to do the daily time frames because that's going to give us a bigger picture of what's happening in the high time frames for things like cycle analysis that I'm speaking about. Hopefully, yes, okay. All right. Sorry, I'm looking at a big screen up here, and because I have 4 screens, it's kind of crossing me out, but we're past that. All right, good news here. ETH is now up on the screen. Take a look at it as well. I'm not going to spend much time on it. Kind of the same story though, right? You get an idea and understand, like, if I'm focused in on these cycles for my longs and not wasting my time trying to catch every long here, then you're going to do better. Does that mean we can't find good longs here? Of course you can. In fact, blue is a counter trend long type of scenario. So you can imagine if you're taking this to lower time frames and you're looking in that area or these areas, you can do fine. You can even long in red. Red is an area where you can absolutely long as well. It's just that red means, and we'll talk about it more, in need of repair, right? So you better see some repair before thinking about taking a long if you're wanting to be consistent in your approach and find edge. So that's going to be a key for that. All right, so I just wanted to show you that. Let me not mess this up again. Bitcoin, okay. All right, jumping into it a little bit more. So why do I want to start this series? This is very important. In my opinion, the way I look at it is this. There's a million ways for people to analyze Bitcoin or any asset, and you can use this on any asset. In fact, we will. We'll look at many other assets. I don't know if we'll have time to get into it much today because I don't want this particular video to go too long, but we will check out other things constantly in the weekly updates for sure. But what happens is this: you got cycles, you have on-chain analysis, you have liquidity, you got macro, you got your moving averages. And the reality is a lot of these guys that do it are good. They do a good job. I'm not talking negative about anyone specific or anything along those lines. But for me, I wanted to start doing something like this because I genuinely believe that doing it this way is going to be much more effective and helpful for individual traders. And that's the thing I want to bring out. And I want to prove it by doing it weekly so that people can see it. Why? Because when we get caught in one of these greens like this, and now we're doing it week 1, week 2, week 3, week 4, week 20, you're going to say, oh my God, for 20 weeks, this guy's been showing me a green cycle and we've been printing, right? And then it'll really begin to make sense because Bitcoin's a great example. So, a lot of people talk about cycles. They say, oh, the 4-year cycle. Well, okay, the 4-year cycle. And then they might say, oh, this bullish cycle. Okay, good for you, bullish cycle. But the way I would look at it, for me, a broad cycle might have 6, 8, 10 different regime styles in it. There could be a lot of different types of markets within what's supposedly a quote unquote bull cycle. So that's how I see this as different. That's how I view it as, I want it to be a situation where I'm showing you a cycle where you can say, all right, if I have money at risk, I want the information that being brought to me to help me with the fact that I have money at risk, if you know what I'm saying. So, you'll see some of these guys, and again, I'm not picking on anyone, they're telling you, like, oh, yeah, we're still in the midst of a bull cycle. Meanwhile, you got a 50% pullback, right? Okay, well, that's great. We got a 50% pullback in the midst of that cycle. Not that that can't happen. I mean, you can get a rug pull, you can get bad news, things like that. But I'm saying literally happening over the course of like 12 weeks, and you're still telling me we're in a long-term bull cycle. To me, it's silly. I mean, that's just kind of how I look at it. So I want true bias regime cycles to be different. I want people to see it differently. I want to, I want to give market analysis that goes a little more detail, because typically what I'll see is that I'll see a guy and they'll show you a chart or maybe a few charts, and they show you a metric that they like, then they'll show you like an indicator they like, maybe a few indicators, then they'll show you another specific data point or some levels that they focused on, and then they give you their interpretation of it all. And in the end, it wasn't anything that you were able to visually see that could tell you, oh, this is where we're at, or this is a cycle, or this is a scenario. You're relying on the fact that they had to interpret it. Now, I'm still going to do that. I'm still going to provide interpretation on a weekly basis. We're not going to have time on this episode, right? And maybe I'll do a second one, or, well, you know what? I'll probably do one on Monday or Tuesday for sure as week 2, and I'll go much deeper on the specifics. So there will be an element of interpretation where I'm giving my specific thoughts on the charts just to try to give a helping hand, or people might be interested in my interpretation. But what the color aspect of the cycle is going to do, it's going to allow for a situation where you don't have to worry about my interpretation. That's going to be the key, because red is red and green is green and blue is blue. It's going to standardize a starting point, so that I can't come back in 6 months and say, oh, no, this is what I meant, or, oh, you should have seen this, or you remember I said this when I gave those 10 days? No. What was the color, right? That's going to be the key. The key is, can we scroll back, and this doesn't repaint or anything. We can scroll back and say, that's exactly what the market state was at that particular time. And for me, here's the key. I look at it as this. I think that what people should be saying when they trade is, it's not what trade do I want to take. You really need to be in a position where you're saying, what kind of market am I taking that trade in? That has to be the key. That has to be it. So I'm going to get more specific here to try to break some things down. I'll try to zoom in a little bit to do so. But basically, what's green? Well, green should be the most obvious thing, right? Green means healthy alignment, expansion. Green is basically where I'm going to use my best longing techniques. Why bring that out? Because all the TA and cute little techniques that you have for longs are going to work unbelievably well in green. So the benefit of this is that if you got some trading chops, well, guess what? In green, those are going to work out well. What most people don't realize is that most of those awesome techniques that they may have on some of these lower time frames may not be working because you're trading it in the wrong regime type. If you're taking a green style trade, or meaning something that's a long, in an orange regime, you're probably going to struggle. If you're taking in a red regime, you're probably going to struggle a lot. And that's why the consistency element is hard for people to find, in my opinion, right? So that's the idea. So in that situation, my best long techniques, that's green. That's where they're going to be working for me. That's where we're going to get the biggest breakout. Support should be acting like support. That's a big thing. In green, support should be acting like support. So that's why you'll get these stacked layers, and then you'll see topside holding over and over again. If not, structure support holding over and over again. Diagonals suddenly become very important, where you say, wow, a very simple diagonal break, which is the weakest signal you can possibly have, suddenly works very well when you're dealing with a green campaign. And that's the idea. That's the focus here. That's what I want people to kind of focus on and understand. And that's kind of the point, so that we know how we should do it. Healthy momentum should have room to expand in green. Breakout should follow through in green. Like you see this little sign here, it says BQ. I'm showing that the breakout quality is pretty good. What that means is you should see continuation. And if you don't see continuation, guess what? That is a signal as well. So you see right at the top, you get a BQ, without continuation. So if we were looking at this a few days later, we would be very concerned about that. So wait a sec, we got this BQ, and suddenly we're seeing supply come in. Interesting, right? So that in itself is a signal, and that's kind of the idea. You'll see it over here as well. You see a BQ signal, and the BQ all suddenly is hit with supply. So in this case, it only lasted during a mean reversion cycle and had to go back to green, but it was again a signal to let us know that there's some supply coming in that spot. And all we're looking for is edge. There's no magic here. There's nothing magical about what I'm showing you. It's about edge. Now, blue, when you see blue, like something like this, that means you're coming out of a red campaign. And of course, I'm having some kind of difficulties here, so hopefully everyone can see it, because I'm not trying to remake this video. But anyway, what happens, and I'll jump in as we go along through the first few weeks to show you much more detail than this. But the idea of blue is pretty simple. You want to be in a position. Oh, by the way, I should have said this. I want you to be able to look back and say, well, that 7-month uptrend looked really obvious because it was green almost the whole way. And then I want you to realize that that is exactly my point. Thank you. Right. This is exactly my point. Right. So if you can see that, then you're not going to need this series. Right. You're not going to have it. You may not need to tune in next week or any of the next 50 weeks. If you are able to say, like, oh no, I'm going to kill it the whole time within all of these uptrends, and I always do. Okay, well, good for you. That means you're highly successful, and I guess you're not going to need anything. But believe it or not, when I talk to people, sometimes that's what they say. They're like, oh yeah, well, that's obvious. Well, yeah, it's obvious in hindsight. The point is to be able to see it in real time. When you're looking back and say, oh well, look, it's a glorious trend. Yeah, obviously. But we had that glorious trend early, and we had it all the way to the top, and that's kind of the point, to keep you on it. Okay, sorry for that. Just like a real side note, I want you to understand that the system is identifying the environment while it's happening, and that's the key. All right, blue. Blue is pretty simple. It's repair, transition, mean reversion, right? So you were red. Red means needs repair. We'll go into detail about that later. But the idea is that in a blue state, you can actually do a lot of these simple trend lines as well, because when blue starts, it is slippery, right? So blue is slippery. So this one, you see it comes in, it's still blue. We're going to draw a little trend line. You want to see that hold in blue or turn to green, because blue is very slippery. Now in this example, it did hold, so it did fine. But if you come to some other blue examples, first of all, I would go, when I can't get a clean uptrend, I'm going to go the last red to the last red like this. And losing it's no bueno. Same scenario, it tries again like this. And this isn't like a key element to doing it, but just either through the uptrend, or we can do the same thing, a red candle to red candle. Either way, the point is, if you lose that, you got a problem, right? You need this to graduate to green. Otherwise, some of your best shorts by far are going to be blues that fail. Because what a blue is it is a counter trend move, meaning you are in a bearish trend and you're trying to counter that, and you need it to leap and eventually make its way into green. And in the first stages of green, you need to build more structure as well, so that you have some structure to fall back on, something like this, right? But the idea is you'll see these throughout, and now you kind of seen this, you'll understand that a blue breaking down can obviously turn into some of the greatest shorts you'll have, period. Now you got to be careful with shorting. Some people don't short at all, and probably with good reason. You should know what you're doing. But even if it just meant staying out, then that's fine too, right? You could stick, it's sometimes the best move is kind of stay out. But the idea is epic shorts will come from failing blues, and we'll go much deeper on it. There's a lot of techniques that can be used on that, and I plan to teach all of those. But the idea is that you can kind of get a good clue for this. Now, orange is the opposite of blue. I go from blue, instead of blue to red, I'm going to go back to orange, because orange is where you're going to see your uptrends are going to be green and orange, but the orange is meant to be a mean reversion. And the idea is you want to see it hold, build structure again, find some deeper support, and then ultimately rebuild and get itself back into green to kind of restart the engines a bit. If it goes into red, obviously now you're in a downtrend that needs to be taken of it. You need to now repair, and we'll get into that in a minute. But orange is struggle. It's like a two-sided trade. There's going to be a lot of chop in there for sure. By the way, there's a lot of chop in blue, orange, and red. there's a lot of chopping markets in general, as we know. I mean, most of the markets are chopping on one time frame or another. So there's no different. In fact, we need to recognize that and understand it, because now we're going to be tactical and understanding that you need to be more tactical in orange. It's very rangy, it's very choppy. As I mentioned, it's very two-sided. Your longs and short can both work, but doesn't mean you should be taking longs and short all the time. You should be careful, smaller position size, right? You want to look at tighter definitions. You're going to look at range edges. You're going to look at failed repairs. You're going to look for rejections and clean reclaims, which are going to matter a lot more. You're not going to want to marry too much of anything really in orange, because it is that mean reversion type of regime that tells you like, hey, we've lost something from green, and we got to see, like, some people bailed out, some supply came in. We're testing the waters to find out if we're now going to establish a new point for an uptrend to continue, right? So that's a key in orange. Now in the red cycle, red is damage. Red means repair is required. Red doesn't mean short every candle. It doesn't mean that the asset's doomed. It doesn't mean that it just means that repair is absolutely required. Now, some people might hear that might sound like a foreign language to them. It's just that you have to understand that what it is about red is that it has to earn your right. It has to earn its own right to exist, but it has to earn the right for you to purchase it, right? It needs to show you something within the structure. It's lost something. I can't point that out enough. It's key. Now, are your best shorts going to come in red? Of course they are. Your best shorts are going to come in red. Your massive bear markets are going to come in red. But every red doesn't mean massive bear market. It just doesn't work that way. It literally just means that there is repair needed. So you're going to look out for those key signs. It also doesn't mean you can't take longs. You can, but you better be careful, because your edge is very limited with longs in red. Can there be some awesome counters that you could take? Yes. Can you get in on some red to blue types of transitions? Yes, all those things. Now, on the short side, when we do talk about it, of course, you want to be involved if you're going to take shorts. So when you're in red, awesome. By the way, you can find awesome techniques coming off of green, right? You say, well, we're going from green, or green starts to see some type of clear supply when it shouldn't, and things of that nature. There are certainly ways and techniques to utilize that. You might use some Wyckoff skills. You can use any other skill sets you have within these regime formats. But the point is, your best shorts naturally are going to come within red. As you can visually see, it should jump out at you, as I mentioned. And that's simple. Again, failed repairs, lower highs, fresh structure losses. What I mean by that, like, the last thing you want to see if you're a bull is your asset goes red and then loses further structure, like this here. You see this? I'm not going to make too many lines on the chart so we don't go too long here, but pretty simple. You go red, you're already in a sensitive area. Don't lose structure. Lose more structure, deep dark alley. And it really is a self-fulfilling prophecy, because you're basically now losing it until you get stopping action, which allows you to kind of look left on your chart and make some determinations of like, all right, well, what's going to catch this thing? And this can allow you to participate in just beautiful downtrends, especially in things like crypto, right? A lot of stocks, you may not get that many awesome downtrends to exist, especially in things like the S&P 500 or tech names. You'll get some, of course, but that's usually going to be confined to your mega bear markets, which happen in the S&P like these days every 5 to 10 years, right? But anyway, we'll go over that again at another time. But the idea is pretty simple with this. I mean, if you go red, you're going to immediately start to say, hey, am I going to lose structure? If so, yes, that's where you're going to jump in for shorts and things of that nature. It's not something you ever want to ignore. But again, it's not always just a death sentence in of itself. Obviously, this is end of cycle stuff, but this can happen right when it goes red too, where you say, all right, well, I go red, show me something. Oh, okay, well, what happens here? We get a sweep. Suddenly we get a higher low. Okay, not so bad. What are you going to get? Potential, on a lower time frame, higher high, eventually an actual higher high. And now it's like, no, you're building something, right? So all of this, you guys might know that I made a very long video right here and said the bottom's in, right? Why? Well, I was seeing structure that I liked, and it worked out that way. So that's kind of how that plays out. But the idea for me is that I'm going to really want it. I'm thinking this. Even if you have I mentioned it earlier, but if you have a great setup in the wrong environment, it's just usually a bad trade. It can work out, and that's even worse. But what the identifying environments and having a better understanding of it is what's going to truly allow you to be consistent in your approach. All the little things that we talked about, you'll know, like, no, these are the type of plays I take in green. And when they're not working, that's a clue, right? Sometimes that's going to give you your best flip information, because I always say, the best sell signal is a failed buy signal. So it doesn't mean that your logic was wrong. You have failed buy signal, but okay, well, in that situation, that's information, that's intel. That's what we're trying to do. We're all detectives here. We're trying to study the footprints and have an understanding of, like, all right, well, where are things headed? We don't want a bias from our gut and from our stomach that we're tied to, but we do want, so I call it true bias. We do want to have a true bias based on the regime and the market it's in, and understanding, like, no, this thing needs to build some structure. This thing needs some time. It needs some stopping action, and then it needs to show us that it's willing to hold. And then once it does that, it's a little bit slippery, like in blue, right? So, okay, well, this is a slippery slope. We better hold on. So that's the idea here. And that's why I want to put something in front of people on a weekly basis where they can understand that a lot of the good systems appear to stop working because the trader changed environments and they never really changed the way they were trading. So if you're still taking green continuation trades in orange, or you're still treating blue repairs like it's a mature bull market, and you're still buying red as though the market owes you some kind of support, you're gonna have trouble, right? And that's the and that hurts you because you lose confidence. You lose confidence because you're not understanding when you should take that kind of trade. So I'm excited about this. I don't want to go too much deeper on this. I was going to go a little bit deeper and kind of talk about some other things, but I see time is not on my side here, and I do want to keep these videos at a reasonable time. And we're going to have many, many weeks to do this, but the benefit is I'm so excited because I know I'm going to be able to show you this stuff and leave you in a situation where you're seeing, these kind of trends. By the way, it's any asset. We'll cover assets. I'll take requests as well. Let's look at something like, again, I don't want to freeze up my time here, but let's just look at core sectors real quick. I feel like I can tell my computer's already giving me a headache here, but just to kind of point out, if we jump into something like, everyone knows what's going on with Micron, right? Well, with this, it's already great things. It really wouldn't matter as long as you've just been trading Micron the last couple of years. You could say, yeah, I've been fine, right? But what I'm here to show you is that if you get the regime right, if you get your green and oranges right, and you're trading longs here, and you're not trading it at all for most of this, maybe you took a shot in here, it didn't go, that's intel as well, you're back to red and blues, you're just sitting away. We're not trying to short a Micron unless we're on a very low time frames and selling the same day. But other than that, and then you're participating again, from $90 up to 1200. Yeah, that's going to be beneficial for you. What about SanDisk? Well, in SanDisk, you're in a situation where you could have also participated in the vast majority of the move. Obviously, a newer asset after the split, but you get it. WDC, same type of thing. In WDC, you could have just been participating in it the entire time that it was green and not when it wasn't. That's the idea, that you can now cherry pick your opportunities and work in the right environments. What about the stocks overall? Same thing. Let's work within the environment that we like and create a situation to where the environment itself is what's going to be beneficial for us. What about, well, I don't have to go on. I think you kind of get the point, but I assure you that the idea is pretty clear and pretty simple. I'll go much deeper in showing you more assets. I look forward to seeing you next week. I think you're going to enjoy it.